Hello guys. I hope you guys are doing well that side. Well, I want us to look at Nasdaq. I don't like to waste time, so we're going to do an analysis on Nasdaq. And if you have been following this channel, you remember that the last time all these drawings that you are seeing here, they're from the previous video, right? So when we did the previous video, the price was somewhere around here, as you can see on the screen, and we had predicted that he was most likely to do something like that, right? And then what happened was that there was fundamentals sometime last week, and they caused the price to overshoot the level slightly, but at the end it is going in the direction that we predicted. Basically, this is how we do things here. So, and I see that we have just crossed the 1000 subscribers, and yeah, so I want you guys to continue subscribing, and then I'll keep on giving you the content. So I'll remove all these drawings here, and then we'll start from scratch, right? So you know that I always do the same thing over and over again, right? So we always start with the highest time frame, just so that we have a quick look as to like where is the price and where is it going, right? So that we say on the longer run or the bigger picture, this is what we have, right? So this will still look the same as what we had on the previous video, like nothing has changed. We still have this as our support, and we still have the trend as bearish, right? And we still have this as our nearest resistance support. So it's very important for you to mark the closest zone so that you can just say, oh, I think currently the price is in this direction and it seems like it's coming from this zone or coming from this structure and it's going in this direction, right? And it being bearish, we have got a bearish trend line here. So basically, in that video, we did mention that the price, anywhere where it is touching your trend line or that resistance is most likely gonna be rejected, if you still remember. And you can see here it is doing exactly that. So that's why I'm saying yes, you can be someone that's trading H1, you can be someone that's trading M15, but it also helps. It's not gonna hurt for you to just spend that 1 minute, 2 minute, or just even less than a minute just checking that bigger picture, just having that bigger time frame, so that you can say, oh, bigger picture, this is what I have. Then you still go down until you hit the time frames where you'll be executing. You need to do that so that you know that whenever you are making that final decision on the time frame where you're executing, you are not overlapping, you're not overstepping, you're not forcing things to go in a way, in a direction that the bigger guys don't agree. So to increase your chances of winning, you need to know how does the bigger picture look like. That's how you need to do it. So you can see here, basically we are retesting, or we are testing that resistance or this bearish trend line, and we're being rejected. So we have got a very higher chance of coming to this. For as long as the price does not break this trend line or does not break this resistance, we've got a higher chance of coming all the way down to the support, simply because this time frame is bearish, right? So then we moved on to the weekly chart, and the weekly chart also said the same thing. The weekly chart simply says we are bearish. We have got this as our bearish trend line. We've got this as our resistance. It's being hit, and it's the same thing. See the rejection. So that's what I'm saying. When you're watching these things and checking these bigger time frames, you have an idea to say around this level, there's nothing wrong with me trying to sell on my H1. If you're someone that's trading H1, to say that if I get something to sell on H1, it's a good thing. I can do that because I know that what I saw on weekly or what I saw on monthly actually agrees with what I'm trying to do here. So it going to the downside anywhere around there will be your first take profit. And remember, it can still bounce like that, or it can break, and that's when we will say it increases the chances of reaching this support. So that's all that you have on weekly. Still bearish trend line, resistance here. So we're still bouncing to the downside, and then it can still struggle to pass there. So that will be the first target. Now let's check the daily chart. The daily chart is basically the one that we had when I was the previous video. We had said that the price had broken the trend line, the price, this resistance broke this support. So we are saying when the price goes to that resistance, it's a very good area for you to search for selling trades to at least somewhere here. This one. Anyway, that's a very good area for you to do what? For you to exit. And you can see the price did exactly that. It went up, it overshot the level a bit, but it still closed the day with the bearish rejection. It still shows that even though there were some fundamentals, that's why I don't like the fundamentals, because of what they will have, that sudden spike, but it's not a true reflection of what the market is doing. You can see that all that momentum still ended with what being pushed down, and then the normal movement started from there. That's why I prefer the quiet, normal conditions where I know there's no like sudden spikes and stuff like that. But sometimes these spikes, they can push, they're just there to complete the setup that you're waiting for. It can just push the price towards the area where you've been saying, let me wait here, I want to sell there. So sometimes the spikes are just there to complete that setup. So here we can see now that the price is sort of approaching. Remember, I said on your monthly to say that anywhere around there, it's your good area for you to exit your trades, because the price failed to break it here. It can still fail to break it here. If it breaks it, it will be on its way, in the right direction, pushing towards that monthly area of support, right? So, but now that the price is approaching this guy here, this guy, so we are approaching, or we just touched this guy. Let's just mark it using the real rectangle so that we can just check if it was hit or not. You see, you are touching it. So the price is touching this support, and this is the support that pushed up. You can see the momentum, and it's also around the same monthly or the weekly area that I said we failed to break, we can fail again. So you're knowing that the price is inside a daily support, right? If you're trading your H1, you can say that maybe if it hits that daily support, maybe on H1 you'll get something like that, and then it hits the daily support, and then maybe it starts to react from that daily support, maybe breaking this trend line. Then you get the retest and say the structure is changing. I know most of the stuff are still bearish, but because of what I see, the momentum is shifted to bullish, and the location also being inside that daily support, it's not a bad idea for me to try and buy. So trying and selling now is not a good thing. It's not something that I would advise you to do, unless if you like to take risks and smash and grab and having those scalping trades. But right now, in terms of when you look at the location that we are at, it's really not a good idea for you to sell. You had a very nice chance. Remember, we had this ever since we started. That's why they say you need to sell high, you need to buy low. It's very important for you to do that. So that's why when the price was still up there, we were saying you can sell. And now it's been moving. Now it has reached a location where selling is no longer a good idea. You can just manage those sell trades that you had from the top, and then you can exit them because you have hit a wall. You have hit the floor, basically. Yes, you can break the floor, but we do not predict such. So that's why the best thing to do would be to tighten your stop losses or to exit your trades. And then if the price breaks that wall or that floor, you will then search for the nearest area where you can join the momentum to the downside. We don't chase the price, right? So this is what our daily looks like. Let's quickly look at our H4. And this is our H4, right? And the price is still moving very much to the downside, and it's still bearish. You can even put a bearish trend line there. You can have this as your nearest resistance, and you being at the support on daily, right? So if you're someone to get a buy trade, maybe let's say on your M15 or H1, you get a trade, you'll be buying and exiting at around this trend line, because you'll be saying I'm buying on H1, meaning I'll be targeting the next opposing structures. You're not gonna buy and say you are targeting that. No, you are buying on H4, but H4 is still bearish, so which means that trade is just a short-term trade. You're just gonna target the next opposing structure. You are not gonna take a trade where you're gonna target anything up, at least until these guys are taken out, at least until this trend line is taken out. Then you know that the momentum has shifted. Then now you can plan a trade for long term. But if you're planning to buy here, you need to exit somewhere around there. It's much safer that way. So currently, if you've been selling, you have made more than enough. Don't be greedy. take out your profit because of what the location now says. You holding a sell trade, we are inside the support, we are touching a support. It's not a good idea, so you can just exit your trades from where we are. This has got higher chances of what being rejected, but if it fails, if the bulls don't kick in, the sellers can still defeat them and take out their zone. Then you can just continue selling to the downside. So the best thing to do is to let the market show you where it wants to go, then you join that. You don't make such predictions where you can't even explain how you came about making that decision. So now let's check our H1. Our H1 looks like this, and it's still bearish. We have a bearish trend line, we have the nearest resistance. So that's why I'm saying maybe you decide to say, I know that this location we're most likely to get a pullback, so for me to catch that pullback, maybe let me use my M15. Then you're looking for confirmation there. You'll be targeting this guy's max. This is your max take profit. So you'll be exiting there, because remember, we are still bearish. This can just be a pullback, and then we continue with the bearish trend. This trend is still very much bearish. So to play it safe, you need to say once the wall is hit, because this is a short-term trade, I'm buying when the structure is bearish. I'm buying because the location allows me to buy. And then if I get a confirmation, I can buy. So you get to that resistance, you are out. You are out. If you've got more than one trade, then what you can do is that you exit one trade, you take the remaining trade, you put the stop loss there. So the advantage of doing that is that if the price does break that trend line, you know that you already have a buy trade from somewhere there. It breaks. Maybe you're just looking to maybe continue buying like that, but you'll have that trade there. Or if it just moves like that, you know that even though it didn't give you a chance to enter again, you are holding a trade. But it's a risky one because you're still bearish, so the price can just do that. So you know that even if it does that, you're not going to lose anything. Your stop loss is positive. You're just hoping that because you are coming from a higher time frame, which is what a daily support, you're coming from a daily support, you were hoping that that daily momentum from that daily support, the bullish momentum from that daily support, would just push up and break the structure on this H1. But that didn't happen, but it didn't lose anything, because there's no way you would watch the price move up there and then you still keep your stop loss maybe there, and then you still wait for it to do something like that and take you out with a negative stop loss. Come on, that's poor trade management. You need to make sure that when the price is moving in your direction, do something with your stop loss. Do something with your stop loss, and always have a target. Always have an area where you are placing your stop loss. Your take profit. You cannot just trade, but you don't know where you're going to exit. You cannot do that. So to conclude, we're just saying, because of the location where we are, you are searching for confirmation. I need to make sure that we are clear here. We are waiting for confirmation to take a buy trade. Without a confirmation, we don't have a trade. We cannot go in without confirmation, simply because the trend is still to the downside. We are just trying to go up because of the location, the higher time frame support. So we're saying if the price is showing us some signs of weakness, that the bears, even though they are still bearish, so they are still pushing the price in a bearish trend. If they are showing signs of weakness, that's what you're looking for as your confirmation. Then you go in. You know that the trade is still a short-term trade. You're just targeting the next opposing structures. The nicest area to exit will be around there or around the trend line, whichever one is hit first. Then you are out, so that just in case the price does this, you are safe. So let's quickly check M15. Even though I don't like it, you don't yet have a confirmation, so you're looking for confirmation around there, or the price can see it miss the zone slightly, but it's feeling the hit from that. It can still come back into the zone, as long as you know that anywhere inside the zone, anywhere from here, if the price is giving you a sign to buy, a reason to buy, you're going to buy, target that, then you are done. Alright guys, that's all that I wanted to share with you guys today. I will try and give you a video every day, but I know it's going to be very difficult, but I'm just glad that we are growing, the family is growing, because you can see already there's 1,000 people that says they love this content, that they subscribed. So please guys, those that subscribed, please don't forget to, like, after watching the video, just like the video so that the YouTube can push it up to more people. Then we grow and we reach more people, right? Do not be greedy with the information that I'm giving to you for free. So like, share, and comment on maybe a pair that you'd like for me to go over. Then we will take it from there. And those that are watching here and they haven't subscribed, or maybe this is your first video, please, after watching the video, if this is the style of trading that you feel like it's easy for you to understand, or it makes sense to you, you like it, you want more videos, you want YouTube to suggest more videos from this channel, more of these videos to you, you can just subscribe and hit the bell icon so that whenever I upload something new, you'll be notified, and then you can watch the video. Alright guys, so that's all that I had for you in terms of the structure on Nasdaq. Then we will continue with the next video, maybe probably tomorrow. Alright, thank you.